Is this the worst housing market ever to try and purchase a home as a first-time home buyer? Is the American dream of owning a home dead? Well, in today's video, we're going to talk about some recent statistics that show exactly what's going on in the housing market. If you're currently a first-time home buyer or someone looking to purchase a home, it may seem near impossible at the moment with very little inventory to choose from, homes selling above the asking price, in some cases hundreds of thousands of dollars, homes going into escrow very quickly, and at the same time, interest rates have been going through the roof. So we're going to take a look at some data, some charts, and show you exactly what has happened over the last couple of weeks since the start of the year to give you an idea of exactly what's happening in our current housing market, a housing market forecast, if you will. But we're also going to talk about some light at the end of the tunnel that's likely going to be coming over the next couple of weeks to provide a little bit of relief if you're out there searching for a home. In addition, we're going to talk about some offers that I've written for clients over the last couple of weeks, some things we've done, what's worked and what hasn't, and also some listings to give you an idea of what buyers have done in this market in order to stand out. And hopefully that will give you some ammo to arm yourself with if you're a first-time home buyer out there looking to purchase a home in this market. My name is Jeb Smith. I'm a real estate broker here in Southern California. My goal with this video is not to discourage you from trying to buy a home, but actually to give you some information to let you know exactly what's happening in the housing market. Whether it's good or bad, it's good to be armed with the right information so that you can make informed decisions. So that's what this video is about. We're going to start by looking at some data that Redfin has put out. It's data that they use on the top 400 metro markets across the United States. Now, this data covers the previous 4 weeks, so a little bit before we started the 2022 housing market, so it goes about a week prior to that, but it's really good information and it compares it against what we saw in 2021 as well as 2020, so you can get a really good idea of what's actually happening out there if you're looking to buy a home. The very first thing I want to point out is that the median sales price was up 14%, and at the same time the median asking price for a home newly listed was up 12%. But in my opinion, that's not the biggest problem. The biggest problem is that inventory during this period of time has actually gone down. So not only are sales prices increasing, the number of homes you have to choose from is actually declining, with new listing of homes for sale down 12% from a year earlier. So new homes listed down 12%, the sales prices are going up, and at the same time, pending home sales have increased by 1%. So less properties to choose from, prices going up, but yet more homes are going under contract. This is a problem if you're out there looking for a home. In fact, in the market where I'm in, last year we started as a county here in Orange County around 2,600 active homes on the market. This year we started with just over 1,000. We're down nearly 60% of the available inventory that we had just this time last year. And at the same time, while we're talking about nationwide, active listings fell 29%. to a new all-time low of 445,000 active listings across the U.S. And at the same time, the share of homes that went under contract that had an accepted offer within the first 2 weeks on the market was up 41%, above the 36% that we saw a year earlier. And 32% of those homes went under contract in a week. So 1/3 of the homes on the market went under contract in just a week, which is absolutely crazy when you think about it. And even though the sales prices have been increasing, 41% of the homes that sold above the asking price. In fact, the average list to price ratio was at 100.3% nationwide, which means that the average home 41% of the time sold above that asking price. In fact, while all of this was happening, interest rates have increased nearly 0.75% since mid-December, and about 0.5% of that has come in the last 2 weeks. So interest rates have risen dramatically. And the reason for that is because of the lack of certainty of what the Fed is actually going to do with raising the Fed funds rates. You know, the Fed has come out and said that they plan to raise the Fed funds rate at least 3 times this year. They're going to continue to taper mortgage bonds and mortgage-backed securities and end that in March. But yet you have people coming out and saying, no, they're going to only do it 2 times. And then you have other people coming out and saying they're going to do 7 or 8 times. And the market is unsure of exactly what's going to happen. And that's creating volatility in the bond market, which is causing interest rates to go through the roof. But at the same time, buyers are still continuing to buy. I've listed homes during this time period, and I've actually had clients that are buying these homes. One client told me that their interest rate back in December when they were looking was around 2.5%. At the time they went under contract on the home that I have listed, that rate was over 4%. So we're talking a 1.5% increase in just a month and a half on the loan that they were looking, but yet that buyer is still a buyer in this market. And that is the crazy part, because a lot of us out there believe that as we saw interest rates rise, we were going to see demand taper off a little bit. But what we've actually seen is home buyers out there get scared that rates might move even further up, and therefore they're trying to lock in a home now before rates go any further. And so demand hasn't really dropped off at this point. But I do believe as interest rates stay where they are, you're going to see it start to affect inventory. It's going to start to affect buyer demand, because there's a lot of home buyers out there at the moment that have been shopping that don't realize how much that 0.5%, 0.75% rise since mid-December is actually going to affect their mortgage payment. Once they see it on paper, it may be, a call to action for them to hold off until rates go lower, or it might be them looking at a lower price point that matches what their payment would have been just a couple of weeks ago when rates were lower. And that could cause demand to drop and inventory to build. But that's the big question. That's the million-dollar question at the moment, is will that happen? And that's what we're going to talk about here in a little bit more detail. Now, the light at the end of the tunnel that I'm talking about is an increase in inventory. And I'm not talking about an increase in inventory because buyer demand is going to drop off. Typically speaking, seasonally, we start to see inventory pick up about the second week in February. And I think this year is going to be, another year that we start to see that increase, people putting their homes on the market to get ready for the spring selling season. Now, I personally expected more homes on the market already this year. And while inventory has risen, it's also been met with buyer demand. So we haven't really seen an increase in the active number of homes coming to the market, or staying on the market rather, because they're getting purchased really quickly. But I do believe as we get closer to spring, you're going to see more and more homes become available. And if interest rates stay high, it could be an opportunity for you to get into the housing market with less competition. But if the Fed comes out and provides some certainty as to exactly what they're going to do, you might see interest rates pull back a little bit, which means that buyer demand could stay high and it could still be a very, very competitive market. Now, one thing I rarely talk about in these videos with regards to an inventory increase is new construction. And the reason I'm not really talking about new construction, even though housing starts have risen 1.4% and new permits are up nearly 9%, is because these homes likely won't be built or even be available to purchase until late 2022 or maybe as late as 2023, because of construction costs, because of permitting processes, because of supply bottlenecks across the United States with regards to not only the materials to build these homes, but the materials to finish them. Things like garage doors, things like dishwashers, windows, all of that stuff is on back order across the United States, in addition to finding quality workers that will actually show up and do their job on time. So anybody out there pitching new construction and the number of homes being built as being a player in this market, it's not going to happen. There's just way too many things that are going to play into our environment this year that are likely going to delay those homes coming to the market. And if they do, it's going to be later in the year, which tells me any inventory coming to the market in the spring is likely going to be existing construction, homes that have already been on the market at some point, previously owned properties. Those are the homes coming to the market. And there's a really good chance that some of those homes, those sellers have to find a replacement property in order to sell their home. There's also a really good chance that a lot of those sellers selling those homes also have to buy something else. Very few people out there are going to be selling their homes and not needing another place to live, either a rental or something to purchase, which means it's almost a one-for-one exchange, in the big picture. So any property coming to the market, they have to take a property off the market at the same time. So you understand how this whole supply issue is likely going to continue to be a problem, even with new inventory coming to the market. Now, earlier in the video, I mentioned I would talk about some scenarios that I've personally been through with regards to clients over the last couple of weeks. And I just want to tell you some things that we've done on offers and where we've ended up. Right? So I'm here in Southern California. I've written offers on a couple of different properties. One here was in a city called Garden Grove. The property was listed at $650,000. It was a 2-bedroom, 2-bath. We offered $750,000. My client was putting 40% down, very, very well qualified. In fact, they waived the appraisal, they waived the loan because we looked at it and we saw that, it could likely appraise for $750 just based on some other comps out there. And we didn't even get a counteroffer back. The property ended up selling for over $800,000. They had multiple offers in a community where, the average sales price was probably in the low 7s somewhere. At the same time, working with a cash buyer here in Huntington Beach on a property that was listed at $1,350,000. I looked at the comps. Model match sold just a couple of months ago for $1,275,000. So this property was about $75,000 over the last closed comp, and we were doing a cash offer at the asking price with a 10-day close and giving the seller a 60-day free rent back. And guess what? We didn't get that property either because the buyer on the other side, we were told, went significantly over the asking price. And my client and I talked about it, and we discussed, we would go up in our offer, and we did. We ended up going to $1,360,000. But it didn't make sense to go above that just based on the comparables out there. But yet, there were buyers out there willing to do it. So as a real estate agent out there, it's really, really tough at the moment to guide buyers through the buying process because you don't know what somebody is willing to do on the other side. So just keep that in mind when you're out there making offers, is that, you really have to come in with your highest and best up front. Now, I know for many of you, what you offer initially might be your highest and best, but I just want to provide some clarity out there when putting in offers on property that, it's likely in your best interest to submit, your best offer up front so that you can guarantee yourself a counter if they are going to counter, and not expect to make your best offer after you receive a counter, because in some cases you might not receive one, right? I mean, I just told you in my example, we didn't even get a counter in one of these scenarios, and we made a super solid offer to begin with. Now, both of these buyers that I'm talking about here, I've been working with them for months. We've been looking for the right opportunity. We've made offers before and been in similar positions, but yet the offers that we made before were actually lower. So we're raising our offers. We're going to higher price points because where they were looking before, there actually is less inventory than even in these higher price points. So it's a struggle out there just for everyone, not just for people in the lower price point, but the higher price points as well. And at the same time, I actually had a listing that I put on the market as a coming soon. Then we ended up accepting an offer prior to it going live on the market because the offer was so strong from the buyers that my sellers didn't want to pass it up. And so on average, what I've seen in the first couple of weeks of the year is homes selling anywhere between 5 and 8% above the asking price. And I know a lot of the major organizations out there were predicting, an increase in 2022 of somewhere around 7-8% on average. So we're already seeing that in the first 2 weeks of January, which tells me that you're likely going to continue to see homes appreciate. You're likely going to continue to see homes sell above the asking price, which means it's going to be difficult as a home buyer out there. Now, something I want to point out, real estate's local. Maybe you're in an area where there are more listings. Maybe you're in an area where you're seeing price decreases, where homes are staying on the market a little bit longer. Where I'm located, that's not happening. The average days on the market is around 21 days, and we have inventory less than a month supply. So things are still moving very, very quickly where I'm located, but just pay attention to the market that you're in so that you can make informed decisions when making an offer. And it's also helpful to make sure you're working with a professional real estate agent as well as a professional mortgage expert as well, just to make sure you're getting the proper guidance on both of those, someone that can hold your hand and guide you in the right direction. And if you need someone, I put a link in the description below, someone that can guide you through that process, works the way I do, and knows exactly what they're doing. But if you're continuing to wonder what's going on in the housing market, do me a favor, check out this video here. I dive into it in a little bit more detail. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.